Hi, Jim McNees with Guaranteed Rate Mortgage, and today's brief tutorial will be the top 10 mortgage questions searched on Google. Top 10 mortgage questions searched on Google. Number one, how do I start the process? You need to find a lender that you trust, that you know, usually from a friend or family member that has used a lender successfully in the past, and that's how most of us loan officers get our business, from referrals, past clients. Once you contact the lender, they'll tell you exactly what you need to do to start the process. Number two, documents required. If you search Jim McNees Guaranteed Rate YouTube video, you'll see items needed. But basically, to get started, you need W-2s for 2 years, 30 days of pay stubs, 2 years of federal tax returns, 60 days of bank statements, and there's a few other documents, but those are the main things to get you started. Again, your lender will tell you what you need. Pre-qual versus pre-approval. I wouldn't even pay any attention to a pre-qual. Make sure you get a pre-approval letter. That usually means your lender has done a online approval system, either through DU or LP, which is Fannie Mae or Freddie Mac, online desktop underwriting. Get a pre-approval based on the information that you've submitted. Number four, what mortgage is best for you? There's FHA, VA, conventional, jumbo, renovation loans. There's all kinds of different loans. So you really need to just have that discussion with your lender. If you're a first-time borrower, that's going to narrow it down. Many people have unique situations on investment properties and unique situations on the property they want to buy as a primary residence. So everybody's different. Every file is different. There are no two situations that are alike. Number five, are there mortgages for first-time borrowers? Yes. Our industry is heavily geared towards getting first-time borrowers in a house. The most common would be FHA, and then VA and USDA, and then there's different states have different bond programs. So the answer to that question, yes. Very, very many first-time borrower programs available. Will my rate change? Number six, will my rate change? If you have a fixed rate mortgage, it will not. If you have an adjustable rate mortgage, it can or will. Usually adjustable rate mortgages are fixed for 3, 5, 7, or 10 years, and they can go up 1 to 2 percentage points a year, and they cap out normally around 5%, give or take. So they can adjust after the initial fixed period of 3, 5, 7, or 10 years, 1 or 2 percentage points a year, and they cap out. Got to be careful with ARMs, different animal than a 15 or 30-year fixed rate. Number seven, what are points? You can buy down your interest rate. 1% of the loan amount usually gets you a 1/4 point reduction. In today's world, rates are very low, historically low. Usually does not make sense to buy down the rate. Sometimes you may need to qualify, or you just really want to buy that rate down and pay the loan off. But normally it doesn't make sense to pay points to buy the rate down. How much will I need to buy a house? Number eight. In many cases, you may put down 0. FHA 3.5%. Conventional is anywhere from 3 to as much as you want. On a conventional loan, if you put down less than 20%, there's going to be mortgage insurance involved. FHA with 3.5% down has monthly mortgage insurance and an upfront mortgage insurance premium. VA has an upfront mortgage funding fee, but no monthly MI. So it's all over the map. In many cases, we can get our military borrowers in for nothing. And on FHA, in some cases, with the utilization of gift money from a family or a friend, you can get in for very little or 0 down as well. Number nine, how long is the process? Purchase loans, 30 days or less. Refinances take usually a little bit longer, but the normal rule of thumb is about 30 days to get everything going and closed. The more organized you are with your financial paperwork, the quicker and more efficient the process will be. Number 10, what is an appraisal? An appraisal is something the lender orders, and they go out and appraise your property and determine the value. Now, what an appraiser is going to do is look at the house, analyze the size, the bedrooms, the bathrooms, the upgrades, etc., and then find like comparable properties in the neighborhood. If it's a brick ranch, 3-bedroom, 2-bath, they want to find comps that are brick ranch, 3-bedroom, 2-bath, not 2-story colonials. So Normally they're going to go out and find 3 to 5 comps, and that will help determine the value of the property, and the lender will only lend to that appraised value, will not lend to more. So on a purchase loan, we're going to lend to the purchase price or appraisal, whichever is less. We'll never lend more than the appraisal. That kind of dictates the value of the house, and everything falls into place after that. Top 10 questions in the mortgage industry on Google searches. I hope that helps you. Thanks. Bye.